Hello everybody, welcome to the Trader Merlin Show. It is your Friday edition. Hope guys, see you guys enjoyed my graphics I chose for the day. Yeah, I figured I would have a little bit of fun with the show. So, hello everybody, welcome to our weekend edition. I see my regulars out there, Steve, Tomasino, Jorge, Dana, Richard as well. We're all invited for the free drink. It's cheers, it's happy Friday. As you guys can see, I've taken a step back from the whiskey and moved my way down to some frosty Modelo here. So cheers everybody, hope you had a great trading week. Alright, and Sean also, anyone writing the crazy 18 September? No, I'm not myself, not trading that one yet. Yes, I'll bring the picture up for those who may not have seen it. I was having fun with this one, and I thought, you know what, let's take my normal cheers picture and add a little blood to it. It wasn't that bad of a week for me, guys, but I did end up with a losing week, which I definitely don't like to have. As you all know, a couple of bad trades can do that very, very quickly, and I'm one to not bullshit you with regards to my trading gains, as many others are, and the one particular that you know I just despise with all my heart, how he'll post a picture just only saying, I win, I win, I win, I win, I win. BS. FTC lawsuit says you actually lose money, my friend. So, it's important that when you do have those weeks, it humbles you. So, this week you just got to learn from the mistakes I made, and a lot of it was just bonehead mistakes and things moving too quickly, but all in all, whatever, it's okay. It's just a losing week. I don't take it too seriously. It will we'll get it back down the road. It's part of the course, like I say, it's the red light analogy. So we'll move on from there and not spend a lot of time with that. What I do want to do today is start off with really listener questions. I'll give you an update of what's going to happen with the calendar, because many of you have been asking me about the Bitcoin session I was planning on doing. So here's what the schedule is for next week. I've been trying my hardest to get Scott McCormick on the program. The good news is Scott McCormick will be on the program on Monday. He does a thing called the Beck Report, which is bonds, equities, currencies, and commodities. And I thought, you know what? Let's talk about that. So we'll look at this kind of perspective of how those instruments steer the markets and how he uses that. Every month he does a review of those four basic markets: bonds, equities, currencies, and commodities. So very happy to see Scott McCormick on Monday. Tuesday will be more of a longer-term wealth piece. We had Justin Krebs on this week, which is a great show. We will also have him back on Tuesday to talk about annuities, which most people look at as an evil product. And I would normally put it in that category just because it's normally riddled with fees. Structurally, I think annuities serve a place, but it has to be for the right person. We'll talk about that with Justin Krebs on Tuesday. Wednesday, if I can get the microphones fixed, we're going to have Bill Addis on the program. I want to do a bond update. Haven't had one in quite some time. And for those of you who know, Bill Addis is just awesome. Now, Thursday is the day where I plan on doing the show. I think I titled it, I haven't looked at the calendar on TraderMerlin.com, but I do believe the calendar on TraderMerlin.com should be updated here by the end of the show today. And it's called Why Bitcoin Will Be $100,000 by 2023, meaning at the end of 2022. So I'm giving myself a couple years out there, but I'm going to walk through that one. I think some of you will be interested to see the math, the numbers, why, if you are a math person, and especially if you're a supply and demand person, it makes sense why it will not only be 100,000, it could actually be potentially much, much more than that. And there's a couple of factors that I think are critical. So that will be the show for Thursday, and then Friday I'll do an open Q&A as normal. Yes, Big Ab, he says, yay, Crypto Thursday. I know, I may have to whittle it in one day a week. I just, it's tough because when you do a show like this, there's so much to talk about. I'm afraid to go down the in one direction's rabbit hole like cryptos, and then have a bunch of the audience go, I hate this show, I'm never watching again. Because some people feel that way about cryptocurrency. So I will sprinkle more of it into the show for sure, but I think it's, especially as a clickbait type of thing, it's awesome to understand the math behind it, and why I think, and many others do. I think Brendan might not be here today, but I think Brendan would also back me up saying that Bitcoin will probably be well over $100,000 in the next few years. But it's just simply math that is driving it. And of course, I'm a math person. So let's start off today by going into some listener questions. I wanted to start with this one, which is from Tom, and I think Tom is here today. Yes, he is. There he is. I like this because we have been talking about diversification, especially on Tuesday's show with Justin Krebs. We really hammered home the point of you want to mix things up so that you're not exposed too much, and you can kind of offset diversification risk, which is the principle and cornerstone behind portfolio theory. Now, I'll read the question for those of you who might be listening to the podcast, and if you're not listening to iTunes podcast, I would encourage you to add that one to your list. It's the same show, but maybe you just can't stand to look at the visuals. Tom says, if your moneymaker is your quarterback, why not diversify? Would this make sense? First quarter, Jimmy Garoppolo. I'm a 49ers fan, by the way, folks. First quarter, Jimmy Garoppolo. Second quarter, Kaepernick. Third quarter, Montana. Fourth quarter, Rothfeld. Well, me standing in at a $160 and only 5'8", I probably would suck as a quarterback. So unless we're up by like 100-0, I'm probably not going to come in until the very end of the fourth quarter. That said, we're missing one here. I would probably remove Kaepernick. I know he's exciting and everything, but I just don't think he's as good a player as somebody like Steve Young. So I'd probably start with Montana just to make sure I get the points on the board and our team set up. Then I'd go second quarter Young, third quarter Garoppolo, and then me in the fourth. Big Eb says Garoppolo God. You're right. He's not that great. Anyway, the reason I want to talk about this is the analogy that Tom is making is great. He's saying, look, if you've got, kind of 4 stocks, why don't you rotate those? And if you know that, I'll just use the FANG stocks because they're easy. Why don't I buy into, Facebook? And then when I ride Facebook for a little bit, I'll move out of that and I'll move into Apple. I'll move out of that, I'll move into Google. I'll move out of that, I'll move into Netflix. The problem there is you need to spread it around, because if you were to do what most teams do, and that is you have a quarterback, like 49ers or Patriots, any team you want, you have one superstar quarterback. And for most NFL teams, all of the game results ride on the shoulders of that quarterback. If you twist an ankle like the 49ers quarterback did 2 years ago, the season is over. It's for all intents and purposes done. That's the risk. That's why diversification is so key. And, unfortunately, with the list of names you have here, I'm pretty sure that no NFL team could afford to have Garoppolo, Kaepernick, Montana, and, of course, the ever-expensive Mr. Rothfeld on their team. But by spreading it around and having a stable of stocks in your portfolio, again, if one of those goes down and has a season-ending injury or, gets downgraded for fraud or something like that as a company, then you don't have to worry so much. So that's Montana and Young. They played in the same team for a little bit, but they were they both won Super Bowls. So to me, that's diversifying. So yeah, I love the comment of the question, but I do think that spreading it around, especially from a long-term investor perspective, is just the more prudent thing to do from a safety standpoint. If you are a short-term trader, ride one stock. I found that actually to be much better for me early on, as opposed to, okay, we got 2 camps, right? The discussion with Justin Krebs was long-term investing. So if you're looking for portfolio theory, trades are going to be 6 months, a year, I'm planning my retirement, etc. Have a stable. Don't just have 100% of your portfolio in SPY saying, it's the market, it'll be fine. No, hedge, buy some bonds, do some international, get some commodities. I think sprinkle some crypto in there, but spread it around. Yes, you're not going to get the full rate of return of just SPY, but you're not going to be stuck with the full brunt of the loss of the SPY if it corrects. So that's the critical part for long term. If I'm a day trader, Bob Dunn, if you're listening right now, please cover your ears. If I'm a day trader, I don't particularly care if one is going to be better over the next 3 months, 6 months, 8 months. I want to know what's better right now and what's moving right now. So for me, what really helped out early on, and this is actually part of what's in the book, is at the beginning I was told focus on one stock. And I picked what was the fastest moving security at the time. It was actually kind of crazy. It was Netscape. NSCP was the ticker symbol back then. And that was just a wild mover. I know, Netscape. Like, Netscape. .com bubble, my friends. And I studied that one. I didn't do so well. And then I was just bouncing around what everybody else on the floor was trading. And finally, I started analyzing the numbers, which you guys hear me talk about so much. Look at your results. Find out what you're trading best. It might surprise you to find out that, you're trading some stock and you're going, wow, I actually have the greatest rate of return on this one. I have the most profits on this one, yet I trade it the least. I'm going to start trading that one more for whatever reason that is. It was weird. For me, there was a 2-year cycle. I would trade... I traded Juniper for 2 years. I traded Broadcom for 2 years. I traded Exodus Communications for 2 years. That's 6 years of my trading career, almost exclusively with just 3 companies. Now, of course, I traded some other stuff in the mix, but it was a bulk of my transactions. And the point there was, I didn't care if they had the earth-shattering news of an investigation on their books, because all I needed was for it to move. That's the style of day trading. As an investor, I can't have that. So, thanks for the comment, Tom. Oh, you always crack me up with your emails. I appreciate it. Raiders, Thomasina. How do I block Thomasina? Raiders fans in here? My goodness gracious. I'm just kidding. I liked Carr, and then he signed his big contract, and all of a sudden he turned into a big steaming pile of doo-doo. All right, Frankie. This is interesting, and I'm a big fan of this type of analysis where you see a trend or a change or something happening in an industry or market segment. It says, Frankie says, I'm upgrading registers at some of my restaurants, and the only available merchant processor for these registers is a company called WorldPay, who was recently bought by FIS for a nominal $35 billion. It says, naturally, I had to pull up the chart on FIS. Meets all your criteria, seeing a very clear head and shoulders. I'll read these numbers to you guys just so you have them to write down so you can see on the charts here. But he says, I'm entering below, so he wants to go short, below 142.50. Tomorrow, this was actually yesterday, but it'll still work for today. Stop loss 145. Target 1 is 136. Target 2 is 131. Thoughts? Can you help me with my analysis of ATR? My stop might be too tight. Okay, let's check it out. Yeah, the guy, Homer, crude oil has been a snooze fest for the past month. It's just nuts how flat that thing became. All right, so let's check out FIS for Frankie here. I had the ticker symbol up earlier. Let's go FIS. And I mapped out the levels just so you guys have them already on the screen. For those that might be wondering what the head and shoulders pattern means, what he's looking at is, it's a pretty decent one. I will draw it for you. You have what's called the shoulder. And I'm drawing these on the screen, so bear with me as it takes a second to get the stuff all drawn out. There's your head, and then we draw our next shoulder, and it's really going to muddle your chart. That, unfortunately, I have all of the price tracking on these lines, so I should take that one off. But basically what he's looking at is a head and shoulders pattern. And the way that this works is, generally, that is going to lead to a breakdown to the downside. It's simply just showing weakness. And I think even before we start to label this as a head and shoulders pattern or whatever pattern you want to call it, you should certainly take a step back and just look at price, right? I'll keep the lines on here for everybody to see, but I want you to notice the shape, what's happening with the new highs and new lows. All right, so I'm removing all the percentage gains and losses. So there you go. There is your head and shoulders. The bottom line here is what most people will do is they'll say, okay, here's your neckline. It's on snap mode, so let me take snap mode off. When it breaks the neckline, there's the expectation that it's going to go lower. And the reason that this is a reversal pattern is because look what happened right here. Sorry for those of you who listen to podcasts. Basically, FIS broke above the 142.50 mark, had a big run to almost 147. It sold back and tested where it broke out of. Right? It came back down and tested that 142 mark, and then made a new high to almost 150. That formed the left shoulder and then a slightly higher head, but the neckline was forming. If we click forward, if this was still strong, if you guys felt that this was still moving to the upside, what would happen with price from this point? It would come back down to a demand zone, as it did, and then it would make a new high, but it did not. It came right back down to the original area, which was the neckline. So the fact that this right shoulder did not break the highs is a sign of weakness. That's all we're doing, is looking for a sign of weakness. Now, what's great about this type of trade is you can simply set a rule, and I do like what Frankie did here, saying, look, if it gets below 42.50, I'm looking to short it. Great. You see the lines here. There's target 1 is 136. Much further down below, you got 131. I like your targets. I like your entry. Only thing I don't like on this trade is your stop loss, and I'll show you why. You mentioned about ATR. You guys still have sound, right? Yeah. AVP, we got sound. Just got to refresh or turn your speakers up. I'm going to go and add on average true range. And you guys may remember this discussion from a couple weeks ago. We talked about ATR. I'll zoom in more so we can see it more pronounced. We can see that average true range has been dropping significantly. And I'll get rid of this head and shoulder pattern. Actually, I'll explain one more thing on the head and shoulder. When you look here at the ATR, it's moving $2.64. So if you're looking to short this at 142.50, your stop loss is actually a little bit too tight. Personally, I would move it above these highs that it most recently achieved. So maybe go to 145.70 just to get these tails in, right? Notice the yellow box. The yellow box has drawn us to where your lines were. For me, it's there, right? About there is where that yellow box would be. And I'm going just to the outside of it, right? So I would extend my stop loss just a little bit to incorporate your average true range. So if I do it here at this level, I am definitely incorporating in the ATR, which is $2.64. The stop loss looks to be, what, $3.23. So you should be good on that front. Now, one other thing we can do is everybody still with me on this one? I know we've got a light audience today, but I don't see you guys asking me too many questions. Gino, this is 9.5 Trade Station. I don't like the new one. I'm not a big fan of it. Old dogs, you're right. I can't learn new tricks. So I'm sticking with the old version. I've tried the other version, but this is so much more user-friendly for me because I know it so well. One other thing we can do with this head and shoulders pattern here, and this is why I left it, is there is a measuring object a lot of traders like to use. And they'll do it just to give an estimate as to where it may go. I normally don't like that. I don't like to use it as an estimate as to where it's going to go. However, if it lines up with an area of demand or supply, then I'm interested. So let's check it out and see what happens. The way you use that measuring object here is you take it from the peak of the head of the triangle, head and shoulders, which is the very top point, and you go down to the neckline, which is this diagonal line. All right, so I've got that one drawn. It's about a 4.66% drop. Now I'm going to move it to, if it broke that neckline, where would it go? It looks like it comes pretty close. It actually says it should be going down about 135.55, and your stop loss or your target is 136. I like it. I actually think it's perfect because your target is just below the measuring object, which people use. I think it's great. I think your setup here is pretty good. I would be willing to take this trade. Just I would move my stop loss up just a little bit. All right, what do I got from Homer? So let me just go back to that one since he's up there. Tom says I bought Netscape at 56. I can't even remember what Netscape was when I first bought it. It was that long ago. I'm fading in my memory. Homer says crude oil all day since low peak. Last couple of hours, big snore fest. Crude oil is, it's difficult. This is why it's so important to identify when these things happen and move on. Here's your crude oil on the daily, which it did have some swings. But if we zoom out here on the daily, our ranges, which we used to have huge ranges, have just dropped. Look at the ATR at the bottom. You guys can see how much that volatility has dropped. Back in May, when crude oil was only trading at $25, it was moving $4.50 a day. Now it's moving $1.26 and it's $42. So it's almost double the price, and the average movement is like 1/4. Crazy how much things change. When that happens, you've either got to have a good set of rules in there or just move on to something else. Intraday, you had a couple nice swings, but yeah, flatline. And this is, that's trading. That's just the nature of the beast, right? I think we all have experienced that. Where all of a sudden you're like, God, why am I even just sitting here watching this? I don't, Sean. I don't have any comments on the gamma's impact on SPX versus VIX. I'd have to get a diehard options trader in here, but that's out of my league. All right, let me go to our next question. Actually, I'll go to this one just because I find it interesting. Patrick, who's not with us today, he's on vacation. So have a great vacation, Patrick. He says, when is the stock market going to collapse? Hell if I know. You guys know I thought it was going to collapse again back about a couple months ago. So who knows when this thing's going to collapse? If we look at the charts and just ask price when it's going to collapse, that's the best thing to do. And we can bring up SPY, as Tilly has been doing, on our weekend editions. Here is the daily. And does it look like it wants to collapse? It does not look like it wants to collapse. It looks like it wants to keep on going, if anything. We did get an all-time high close today. We did not close above that 4,000 mark, unfortunately, 3,400 mark. We teetered on it a couple times. I'll bring up the at ES so you guys can see that one. And the intraday high on the at ES was 3,396 and a quarter. So we almost got there. SPY as well. You can see on the SPY, we didn't hit that 340 mark. We got very close. It was 339.72 was the high on that one. So my guess is we'll probably see it rip above it just because, as kind of David Warner would talk about, it's that whole number. It's that $42 mark. There's a good chance that you'll see that thing break through it at some point just because people are thinking it's all-time highs. Now, S&P 3,400? It's like a Ouija board. It's the Ouija board out there. Okay. Patrick, I don't know when this thing is going to collapse. Until this thing starts making some new lows, it's not going to. Regardless of what I think about the markets, which I did have a pretty heavy bias, part of mine was that sell in May and go away attitude as well. Clearly not the best sell in May and go away market. However, we have those market mantras for a reason. Statistically, more often than not, you see a lackluster period from May to August. And here we are now in August. Things still look pretty good. Trivia question for you, for the viewers. What is the worst performing month historically on the S&P going back in like the 1950s? Go back every year. Which one has the worst performance of the month? You got 12 to choose from. I'll let you guys type in the chat what you think as I get a nice sip of my Modelo Especial. Yeah, Mario, trend is still up. Remember, trend is your friend to the bend at the end. Remember that mantra. When I went short on when I was looking to build my big short position on the SPY months ago, it was faltering. It was traversing sideways. I'm like, okay, that's hesitation. We're going to roll over. Oh, look at that. You guys are dancing all around it. I'll read the chat for our viewers or listeners out at home. Tom says December. Big Eb says August. Joseph says October. Homer says July. Mike says May. None of you have gotten it yet. Mark says August. It's interesting because Joseph is actually pretty close. Most people think that it's October because it seems like we got all the major big events that happened in October, which is true. But on average, the worst performing month, Alexander and Lisa get the prize today. I don't have a prize, but I'll just salute you with a cheers. It's September, and it's still a positive return. I mean, it's like I think it just recently ebbed into an average positive return, but that's the worst performing month of September, and we're just about there. So most shall see. Now July, guys, those mid months that you mentioned, May, June, July, August, those are normally fairly flat months. That's that summer doldrums, right? They usually gets fairly flat there, which is why they say sell in May and go away. If you were to buy the market, just period, buy the SPY in, I believe it's the end of November, first or end of November, I forget, I'll find out for you as we get closer, and hold that for 6 months. That 6 month period from November, December, January, February, March to April or March is a much greater performer than the next 6 months. So if you're just to split this market into 2 6 months halves, one of them is a kind of lackluster performance. The other one is very good. And that's a historical fact you cannot refute because, there you go. It's factual. We've seen the history. All right, let's go to Tesla. Oh, yes, Tesla on the day. People loving Tesla. Thank you guys that sent me the charts of Tesla, too. Yes, Robinhood had a big spike as well. Is that not a sign of the top? I don't know. And it has a big shooting star out there. This is from Anthony. He sent this one in yesterday. He says, I grabbed a small position in Tesla just before the split announcement. I'm really conflicted about selling it. I'm at an average of 15 or 14.50. I've moved my stop up 2 times already. Currently, I have a $145 trailing stop. Grabbing $350 per share by pulling the trigger is really enticing. What does the smart trader do? I'm curious. What would you guys do? You're in Tesla. You bought it at $14.50. It's ripping to the upside. It almost hit $2,100 per share today. Do you say, you know what? This far exceeded my expectations. Unload it and lock in your. At this point, it's more than $350 a share. Let me see what Tesla's trading at right now. I'm curious what you guys would do. I mean, you guys know me well enough to know what I'm going to say. So here's Tesla. You have actually a big shooting star today, guys. That's a pretty giant gap up. Could be a potential island reversal. It's at 2,049. So right now he's up $600 per share. So, that's a great game by any stretch of the imagination. So what do we got here? I got Big Ed says leg out. You basically take some off the table. Okay, Tom says keep the trailing stop. AVP says sell. Beautiful. This is three completely different things to do. And you know what's great about it, guys? None of you is wrong. Not one of those answers is wrong. I would side myself with Big Eb. I would say I'd probably take half off the table, right? Lock it in. I probably went into this with an expectation. I'm going to lock in half that profit, be stoked with it. Then I'm going to go to what Tom says, which is I'll put a trailing stop in the second half and just let it go. AVP, if he's happy with those gains, there's no problem taking it off the table, right? Because we don't know what the future holds. And this could be the highest print that Tesla ever sees, and AVP is going to be super happy because he sold it all and locked in his profits. If I do it the way I explained, which is take half off the table and do a trailing stop, I'm guaranteed to have half the profits. And then that second part, unless it gaps down huge, I might give back a little of that second portion, but not much. So to me, that's how I would do it. Dana just says stay long. So Dana, that would be, again, that's not wrong. You can stay long, means Dana, but you have to have some mechanism in there to protect yourself should this have some major sell-up, because the fundamentals and a lot of the data on Tesla is a little shady. It seems to have gotten way ahead of itself. That's just the industry noise in the space of Tesla. But I would probably want to lock in some profits here. If you are going to continue to hold it, then trail it up, like Joseph says. The interesting thing, and this is the same thing with Apple, right? You have Apple announcing a split. You have Tesla doing a 5-for-1 split. It's interesting. I don't know the split dates for Tesla. I don't have them in my head. I've been looking at too many things. But for those that know the term 420, it's very synonymous with the cannabis industry. And, Elon Musk obviously rolling a blunt and smoking it on Joe Rogan's podcast shows he's no stranger to it. And someone was saying, what's 5 times 420? Because I think Tesla's doing a 5-for-1 split, right? Meaning for every one share you have, you get 5. And they're going, they're talking about how the market is probably going to push it to that 5 times 420. So when it does split, the new opening price will be 420. I'm like, okay, guys, that's getting a little bit much for market manipulation conspiracy theories, but it is possible. Let me see real quick. Let's go 5 times 420. 2100. Well, I mean, and if it closes at that high, we could be right there. Oh, was it 8 August 31st? Okay. Yeah, thank you. Yeah, I didn't think they were doing 8 to 1. I thought it was a 5 to 1. So today, Tesla hit a high of 2,095.49. So to the original question for Anthony, I can't tell you what to do. This is something that you have to do. And I love that you put down there, what does the smart trader do? A smart trader follows their plan, period. And I love the group. You guys are awesome because there were multiple answers and none of them were wrong. The only one I would say is potentially wrong was with Dana, because you said stay long. I'm agreeing with stay long, but make sure you have some protection in there, because as you've seen, Tesla can drop very, very fast, and you don't want to be the one holding this thing as it goes all the way back down to 500, right? Could it happen? Absolutely. It absolutely could. You just never know. So have some protection in there as well, but if you want to stay long, just set a wider stop loss so that you don't get taken out. So my take would be sell a portion of it, be happy with those gains, trail the second half, and let it run. Otherwise, it's not that that's a smart thing to do. It's what I would do, and that's my rule, and I would follow that on every trade I make with something like this. There you go. All right. What else do I have? Great question from Joseph, who is here with us today. And you always send in great questions, Joseph, so cheers. Thank you so much. It says Merlin, have you ever placed a trade on a smartphone or look at charts on a smartphone? Do you monitor positions on your phone when you're away from your trading desk? Yes, yes, and yes. I make trades on this thing all the time. A lot of times I'll just be laying in bed and I'll roll over and pull up real quick. Oh, well, that's going through a level right now. Okay, let me go long or short on that one. So I trade from my phone quite a bit. I will say that you kind of have to know it very well. You have to be very familiar with it, because it's not, obviously I would much rather trade here where I've got multiple monitors. I can look at all kinds of different charts. I saw Patrick was actually commenting on the YouTube post that Joseph had made, saying, yeah, you can, but you're going to draw trend lines on your smartphone charts. It's kind of challenging to do that. So it's not as good as a home PC station, laptop, whatever you want to call it. I have a desktop here with 3 monitors that's built for trading. So to me, that would be the best. But I'm telling you, when you're traveling through the beaches in Thailand, you don't want to be traveling around with a big old laptop or with your home computer. So this has to do, and I think it works just fine. We have to modify the way that we trade. We have to modify the way you put your orders in. There's a lot of things you have to do to tweak to get it to work right. But maybe I will, Alpha. I'm not gonna do it. My desk's a mess right now, so I'm not gonna do it right now. But sure, I'll show you. Do I leave my desktop on 24/7? No, I do not. Nope. I usually leave it on during the week, and then sometimes at nights, if I have trades on, I'll leave it open. If I don't, I'll just shut it down, because there's no reason for me to come and check it all the time. Let me finish the question here, and then I'll go into that deeper, because there's things that you need to know about computers. And I told you I was going to get a tech guy on the program. I haven't had him on quite yet, but I'm looking forward to it. When you're looking at trading on a smartphone, make sure that you understand the app very well. I use the TradeStation app. I like that one. It works pretty well for me. I've also used Schwab's accounts and Ameritrade's, but I'm a fan of TradeStation's app. It's more like the platform to me, so I gravitate towards that one. So make sure you understand the platform well. Practice a little bit if you are going to be doing it. Always, you should have a checklist of things that you're going to be doing if you're making trades. I'm sure that many of you have made the mistakes of putting in the wrong amount of shares or the wrong ticker symbols or things like that. You should have a little checklist, 5-step process or 6-step process on when you put your orders into your phone, just so you don't make mistakes, because it's definitely different. But I wouldn't have any fear or apprehension about trading from my phone, especially as you're traveling around the world. It's great. I love it, and I would continue to do it. Absolutely. All right. Alpha says, do you leave your desktop on 24/7? I answered that one. I did last night, and it is mad slow this morning. Yes. So a couple things. Certainly, there's two schools of thought on this one. A lot of people would say don't install like an antivirus on your computer because it hogs all the resources and slows it down. In this day and age, I think you have to have an antivirus on your computer because there are these little programs in the back that you don't necessarily have to execute. A lot of them are piggybacking on your system's resources to do a couple things. Number one is they're using your PC resources to mine Bitcoin or cryptocurrency, which is rather interesting. Number two is they could be out there just sniffing for private keys for cryptocurrency. That's like the hot virus thing now. Either way, it could take a toll on your system resources. So I'm a fan of making sure that you have at least a virus protection program on your computer. Number two, I definitely recommend at least once a week a full shutdown and let it just sleep. The reason for that is I want the computer to clear all its cache, all its resources. Let's get back to square one. And a lot of times, if I see any hiccups or issues with the computer, I will do just that. Sometimes I'll see that the mouse may be moving slow or taking a while for something to load up. I just restart it. No problem there. But I think the longer you leave it running, the more problematic it's going to be. So maybe you could make it a routine to shut it down once a week or shut it down every night. I've closed my best trades on my phone, looked at it and said, okay, that's good for you. Exactly. Yeah. One thing I will tell you, if you are trading from a phone, so Telecom Italia was doing this thing where you were asking me to test out their wireless systems. Of course, this is back in 2003, maybe 2002, 2003, and so I had this phone and I was doing trades on it, and I had a pretty big trade. I want to say it was on Broadcom, or Juniper, one of my old flings. And one thing you got to understand is in tunnels, phones don't work. So all of a sudden I found myself in this trade that was just started to really rip against me, and I was doing manual stops, and all of a sudden I lost phone, lost connection and everything, and I was freaking out. So just be careful out there, guys, when you're trading in an area where you're going to be going in and out of tunnels. It could be problematic. Okay. Alpha, I'll take some pictures of my trading setup. I mean, it's nothing special. I've just got 3 monitors, but I'll load them up with all the platform, and that way you guys can see exactly what's cooking. Because I'll have there's 4, 8, 9 charts, 10 charts at all times on my system. And I start with the bigger time frame, so I go daily, I'll go the 4-hour, hourly, 15, and then here I'll have the 5 on my main screen with all like my mission control with watch lists and things like that. So that's pretty much what I do. All right, if you guys got questions, feel free to send them on in. Let me see if I got any other ones that have been rolling through here. It's funny, some people always send me questions in different places. Got the Tesla one out of the way. No. All right, I think I actually went through all of my viewer questions for today. That's awesome. If you guys have some more, send those on in, and I'll make sure I get to them. One of the things I want to talk about today, so there was a question that's come in a bunch, and that is, Merlin, why don't you make stock picks or, call out trades every single day on the show? Well, first off, I'm not selling anything, and until it goes subscription-based, which I don't ever foresee myself doing, I'm not going to issue that type of things. And the reason is, years ago when we were doing Power Trading Radio, I did a thing called the Power Pick of the Day. And in there, I would outline a trade setup that I was looking at and have my entry, stop loss, and price targets. And you can always chalk up to somebody to ruin it. This one guy, I said, here's the Power Pick of the Day, entry, stop, price target, good luck. A couple weeks later, I get this long email from this guy telling me how he wants to sue me. And then I'm like, whoa, for what? And he's like, well, I lost a bunch of money on the trade that you told me to take. I go, first off, I didn't tell you to take a trade. I was just informing you what I was taking, what I was looking at, and why that trade was interesting as a setup for the next day. And then I was like, wait a minute. If you followed the rules, you could not have taken a big loss unless you traded way too big a share size, because the stop losses are always rather small, right? So you couldn't take it a big hit. And so I emailed him back and said, well, did you get out of the stop loss? He says, no. I said, then how am I to blame? right? And so we went back and forth, and finally he backed down a little bit. But ever since then, I'm like, I just don't do that type of thing. I will tell you, there's a couple things I'm looking out for tomorrow, though. Not tomorrow, for Monday. Most of them are kind of bullish setups, actually, which is surprising for me, even wanting to think about going bullish. So let me take a step out of the ring here. The one, there's a few. If you look at the gas companies, if talking about ConocoPhillips, Cabot Oil and Gas, Chevron. Let's look at Chevron. Let's go CVX. So CVX has this really nice hammer formation that comes right into an area. It's loosely into that area of demand, so not the greatest. But you know, it's been a pretty aggressive sell-off from 93 down to about 85. Actually, even lower, we're almost at 83. So I'm going to be using my typical candle formation, hammer formation strategy for this one, which is basically if I get a break above that 85.08 mark, then I'm looking to go long at it. And if we look at, take a step back here, let me disable that one. If we look at the bigger picture here, you know, it's been a rough ride for oil, but it hasn't really done much. It's just been stuck here kind of traversing sideways like crude oil's charts. Of course, these oil companies, Chevron and Exxon, etc. Bullish? Listening? Yeah, I mean, look, I'm actually starting to get a little bit bullish on the oil companies. The more this dollar falls, the better it's going to be for them. And if we get back to more traveling and it can get people comfortable traveling and moving again, it's still summertime, man. People are going to start moving. Gas prices will rise, and these guys will have better profits. So there's CVX. I like Cabot Oil and Gas as well, or COG, simply because it's been in an uptrend since the middle of June, a nice uptrend. It failed to make a recent high on Monday, but it's still looking fairly decent. It has a hammer formation, too, down to that most recent low. So to me, that looks pretty good. I like that. Again, I'm just waiting for that to break the highs. The one that I'm most interested in is one that I've actually never traded before, which is ATO. Here is ATO. There's a couple things I like about Atmos Energy. Again, it's an energy company, and I'm not specifically targeting energy. It just, they all came up on a filter that I'm running for hammer formations as potential trading opportunities. So you guys can see that hard red edge, a gigantic hammer. I mean, it's a red top. For those who don't know what I'm talking about, let me. I know we have some viewers that. I actually got some comments that the show is way over my head, is what a lot of people have said. So let me zoom in on this candle way over here. It's this one right there. Bear with me as my horrible graphics abilities were worked. All right, so come on. So it's this little red candle right there. That's a hammer formation. And what I like about it, a couple things. Number one, it's got that super long tail. Number two, you can tell it's overextended. My guess is that this is going to be outside it would have pierced the lower Bollinger Band. And that is another thing that people are using as filters. If you want me to add that, I'll add it to the screen here just so we can see if Atmos is out below that lower Bollinger Band. It should be. Yeah, so not only is the tail out, the entire candle is outside. That's extremely oversold. Not saying it can't continue down, but it's that elasticity of price that I've told you guys about so many times. I would expect this to actually have a nice move back up here. And if we get that oversold situation in the oil and energy sector, as I kind of feel like there is right here, then we might see this one move up a bit more. So I'll be keeping an eye on this one for tomorrow or for Monday's session. Hopefully it comes to fruition. So that's all I'm going to say. I don't want to go into entry stop and price target. I'll let you know if I make any of those trades in that one. Let's see. The Russell has pulled back, but other thoughts and indices rallying thoughts. You know what? Yeah, Mario, you're right. I mean, basically, RSI, stochastics, MACD, they're all going to show you that this thing is oversold, right? You can just tell by the picture. Let me see if I have any other indicators loaded up here just so we can look real quick. What do I have available? Here's RSI. It'll most likely be down. Oh, no, it's actually not down below 30. It was earlier today. If this tail would have closed down here, it would have been down below 30, but it's at 39, so not quite oversold yet. So if you're using RSI, you'd want it to wait for it to get down below 30 to indicate oversold. This indicator wouldn't help me. Now, let's go to stochastics. Stochastics probably was oversold at some point today, but probably hooked back up. So let me disable that one. Here's just, yeah, you can see it was down, way down. I mean, obviously, it was trading at the low. So it had a pretty significant low on stochastics. It's curled back up. It actually gave a buy signal today, and it looks like since the signal or the slow stochastics or fast stochastics is crossing that negative 20 mark or 20 mark, then that's a buying opportunity. So this is supporting going long. You've got stochastics, you got MACD, you got the hammer formation into, I'm not going to call that a demand zone. It's not really a great demand zone at all, but you do have factors that are pushing this to the upside. My dad is an OTA grad, Bob. All right. Let's see. Hey, Merlin. Actually, I'm sorry. I didn't finish the question about Think. This was really interesting to me. Again, we know that these indexes normally run as a pack, right? They generally run together. Huge change this week. I'll bring up the three indexes. I'm not going to put the percentages on here. Just I have them written down because I was checking this out earlier. And I'll look at the SPY, which I'm going to call the lead dog. And let me take off stochastics here. SPY on the week up 0.77%. Okay, not huge, but it was up. If you look at the NASDAQ 100, NASDAQ had a great week. All right, NASDAQ was up 3.57%. So this week NASDAQ clearly led. But when I look at something like the IWM, it was the exact opposite. Right, you had a down week for the Russell 2000 to the tune of 1.58%. So not a good week for the Russell 2000. Dow was pretty much unchanged. So we're seeing this huge separation, right? NASDAQ leading, S&P second, Dow third, and then in the negative territory, you got the Russell 2000. Again, most people look at the Russell 2000 as kind of the canary in the coal mine, right? It hasn't worked very well in the past few years, I'll tell you that. But normally when the Russell really starts to show weakness compared to the others, it's a sign that the small caps are out of favor, meaning the buying is stepping away from that market, and generally that will lead to a market decline. Who knows? We've used that in the show in the past, and it has not worked. So other than that, I don't have too much to say on the differences there, or the Russell. It says Russell being pulled back, but the other indices are rallying. You know, it's just a little thing to keep in the back of your head, saying, all right, Russell's showing a bit of weakness right now. That normally, if it continues, will pull the markets down, and the other indexes will turn. But as Big Eb says, it's hard to keep up with the cues these days. When you got those FANG stocks in there, I mean, it's hard to stop that freight train. I mean, it is a monster train right now, and as Big Eb says, it's growth versus value, and you're absolutely right. Everyone's focusing on growth stocks right now. What's going to be the best for the future? Where's everybody going? You know, it's Facebook, it's Tesla, it's Amazon, it's Microsoft. Microsoft, surprisingly, in that category. Hey, Merlin, what do you make of Uber? Warren Buffett made a large investment this week, but the chart looks incredibly flat. Business obviously suffered from COVID. Well, I'll bring up Uber Technologies. We can bring up the chart. Choppy as hell, crazy. There are some major problems here for Uber. I am a massive fan of Uber. I love Uber. I think what it's done for drunk driving is phenomenal. It should be given the Nobel Peace Prize for having curbed drunk driving. Because, you know, calling a cab was such a pain in the butt, but now I can just pick up my phone. In 2 buttons, I got a cab picking me up anywhere I am, or an Uber picking me up anywhere I am. I love it. However, in California, they're trying to make all of the drivers have to be employees. And of course, there was supposed to be a shutdown last night at midnight for Lyft and Uber, which I believe got stayed. If that ends up happening, if California gets shut down for Uber, you know, I think you got a buy point much lower. I think you could see a much lower buy point. I don't want to see that happen, because I do feel that if Uber was to go away and Lyft were to go away in California, our roads would be extremely dangerous again. When I took my driver's safety class, I had an alcohol situation when I was I think I was 20 years old. You know we're kids. 20 years old. I got a citation and I had to go to an alcohol school. And basically was dismissed, but he made me go to alcohol school, which is great. Nothing on my record, sir. Did you guys know that between 1:45 and 2:15 in the morning, 75% of the people on the road are legally drunk? That is just such an astounding statistic. It's the only thing I remember from alcohol awareness class was that between 1:45 and 2:15, 75% of the people driving are drunk. That statistic is probably not even close to true today. That was back 20 years ago more than 20 years ago. But if you remove that, the Uber and Lyft potential, we'll be right back up there. We'll be right back up there. I don't know specifically about Buffett's investment. I don't like the price chart. I mean, if I look at this price chart, it's doing what? It's got a downtrend. Lower highs, lower lows. Starting really in June. It's not looking great. And we could go to the weekly and check out something bigger scale here, but there's not much history. It still looks like it's on a downtrend. So I'm not the biggest fan of the price chart of Uber, but I am a fan of the company without a doubt. Gayer says, Merle, what are your opinions on trading without indicators? Do it. Trade without indicators. Do it. Yeah, you're putting most people that trade with indicators put too much emphasis on the indicator, and when they go to like prioritize their trades, the most important thing in their mind is what's the indicator telling them to do, and then where is price. Reverse that. You're not trading an indicator. You are trading price. Every indicator is a derivative of some combination of price, time, and volume. That's it. Right? Transactions. It's just measuring those in some little mathematical formula to spit out a number that we go, oh, okay, now I can put a label on it that it's overbought, oversold, and trending strong. Just look at what price does. You know, a simple example, and I've shown you guys this before, right? Let's go to, we'll pick an easy one. Here's SPY. Do I need to put on moving averages to tell me that this thing is in an uptrend? No, I don't. It's clear as day. You could put any moving average on here, and probably anything over 10 period moving average is where we're going to be at right now, right? What I mean by that is, like, I'll add in a moving average. I'm going to add a 2-line moving average because I think that's what I have loaded up here. So this is the 50 and 200 period moving average, but let me just change this one. Yeah, there's a 50 and a 200. I'm going to go down to a 10. And you can just tell by the way price is traversing, okay, so that one candle dipped below it, but with the 10 period moving average, you can just tell that it's going to be above that, because of the shape of what price has been doing. And what I would recommend for all of you is, if you want to use indicators, do this. Add the indicators to your charts, learn how they're going to react to price, and then take them off. And as a game, what I used to do in class, guys, pick a ticker symbol. Adam says some of the best traders I know use none. Me as well. Most people I know don't use them. Some will use them as an enhancer or an odds enhancer, but most of the time, they're just trading price. I mean, you notice how my charts are pretty much naked. Normally, I don't even have the watermarks on here, but I do it just because of the show, and I know the viewers want to see the watermarks to know what I'm looking at. So I'll pick something I haven't looked at. Well, we could, I guess Microsoft, but that's going to be an easy one too. Okay, so Microsoft's different. If I were to pull up a 10-period moving average or a 20-period moving average, it's going to be chopping back and forth through it, because look what's happened over the last 30 days. It's bouncing back and forth. So a 20-period moving average is probably going to be right here, right around 210 would be my guess, somewhere in there, right? Let me see. Let me add. What I started to do, guys, is exactly that. I would bring up a chart like this and say, okay, what would the 20-period moving average look like? And I would draw it in my head, or even pencil it down on a piece of paper, and then I'd add it on and say, okay, let's add on those moving averages. That's the 10-period moving average. It's traversing right through it. It's a 209, and I think I said 210. Let me put the 20. So I said the 20-period moving average would be at 210. It's at 209.40. I'm okay with being that wrong. You know what I mean? I just know what the indicator would be saying. Same thing here with stochastics and Bollinger Bands, MACD, RSI. I could tell you what the price chart's going to tell me, because I know what to look for on the price chart, if that makes sense. And I don't mean to sound arrogant or cocky. It's just the longer you look at this, you know what the indicator is going to tell you. Give me any symbol and I'll do it for you. Cree. Okay, so Cree is easy. Holy cow. Cree was the lead dog in the semiconductor area too. They were ripping. This was one of the lead dogs in the index. So Cree is a good example. Do I need to put on stochastics, Bollinger Bands, MACD, or RSI? Every one of you right now should know that is way outside the lower Bollinger Band, right? It's totally oversold on Bollingers. It's RSI, totally oversold on RSI. Stochastics, way oversold on RSI. But I don't need to put the indicator on, because I can just look at it and see the movement and kind of get an eyeball. Remember, most of those indicators are for the last 14 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. That's this green candle right here that my cursor's on. Well, that's at the very top of the range. So clearly, stochastics, it's going to be oversold. Bollinger, oversold. So I don't need those. Moving averages. I know that if I put a 20... maybe even a 50, it's going to be oversold. It's going to be underneath that moving average. Now, the 200 might be important here, because it might not be below the 200, right? It looks like it could actually be, it's going to be really close. Let's see if it hits the 200. It should be pretty close. No, wow, 200 is way lower. So there's your 200. 200 puts it down at 50. So let's see if this comes to the 50-period moving average. How to be closer than that? For the most part, I can get those pretty solid. So, yeah, it's down below the 50, the 20, the 10, you name it. So, there you go. Do I think it will turn up anytime soon? Big Eb says on Cree. Well, I mean, you are coming into this area of demand, which I'm not going to put a lot of emphasis on it, just because it's already ripped out of there. But you have this level that it's at, like, right now. There's a couple points that you could take a stab at it. I think the entire sector is performing very well, and that's, if you're looking to buy it, 60 might be a buy point, and also down around 50, call it 57, but you got to put a stop loss below that 57 mark, just because there's a couple unfilled gaps down there that may fill. I have a hard time myself believing this would collapse that much. Semiconductor have been one of the greater performers there. It's been looking really, really good. So, yes, trend line break, you name it. This week has broken most of it. Turned extremely oversold. Big Eb says about 57ish. Yes, I agree. That would be another buy point. I mean, you could take a stab at it now. Notice that in the last 4 days, how the candles have condensed. What I mean by that is the initial fear was this big red candle. The next day, okay, there was a lot of fear as well because it was a big candle, but they've gotten progressively smaller, and it's starting to show a little bit of stabilization and hesitation. So be curious to watch this one next week and see what happens. Given the momentum, it does feel like it's going to go challenge that 57, but let me check volume here, which you guys know I like volume. It's interesting hearing others say they don't. So volume is back to normal on today's trading activity. We're at 1.2 million, somewhere in there. So, we'll check this one out next week. I think it'll be interesting to see how that one transpires. But all in all, this is, to me, buy the trend. Join that trend. I think Cree was because of earnings, if I'm not mistaken. I think they had earnings on Monday after the market or Tuesday before market. All right, let me get through some stuff here because I'm ripping towards that 50-minute show, or that hour show. And I just cannot let Big Eb have the satisfaction of me being an hour show again. So let me go to, what do I got? I was going to go to some list of questions. I already did that. Guys, I really had a lot of fun making this one, by the way. Notice I tried to give myself a black eye. It looks like a monocle. I look like like a proper British, mate. Just reading some papers over here with my glass of whiskey. Let's go to your economic calendar. And honestly, economic and earnings calendars suck for Monday. It's horrible. There's nothing cooking. There was really nothing groundbreaking today. All the numbers, manufacturing data actually came in line with expectations. What you do have going on is Monday's economic calendar. You can see right here on the 24th, you have Euro, German GDP. That's a final. Right now they're expecting it to stay the same. And then you have Bank of Japan with the CPI. That's it. There's really nothing else coming out for the U.S. So Monday's going to be a rather boring day. There's really nothing even with earnings for Monday. There's one company. I cannot remember the name of the company, but it's not a major company reporting on Monday. It all really starts on Tuesday. And to put into perspective, guys, we've had over 470 companies out of the S&P 500 report earnings. So pretty much everybody in the S&P is reported, given maybe another 30, less than that. If you look at the statistics that have come out with regards to earnings, it's remarkable. Completely the opposite. I mean, I should just wear a dunce cap and sit in a corner for the rest of the year based off my thinking. My thinking was that earnings were going to be horribly bad in Q2. 81.4% of companies have beaten earnings per share expectations. And to put it in perspective, the last time we did that, well, actually, that's a record, by the way. The last time we came close to that was in 2018. So we go back 2 years to Q2 of 2018, we were just about 80%. This is 81.4% are beating earnings per share estimates. We haven't done that since 1994. That's a record. I mean, that's a long, long time. It's 26 years. And we're in one of the worst economies we've ever had. What in the hell is going on? And I think 53% of those are beating on revenue. 63% are beating on revenues, which is also higher than normal. So bizarre stuff going on with the companies that are reporting. We have 160-something companies reporting next week. So earnings will be a focal point, but it's definitely the third wave of earnings. It's not going to be that much of a market mover. Yes. Scott McCormick is a CMT. He will be on the program on Monday. I'm pretty excited about that. We're going to talk about what we call the Beck Report, which is bonds, equities, currencies, and commodities. Those are, it's a report that he does for himself every month. And when I was doing Power Trading Radio, I tried to bring him on with regularity because it's very powerful stuff. It's just basically, what are the warning signs? What are the shots across the bow that he sees? And of course, I'd love to get some fresh perspective on it. All right, that will do it for me, everybody. I'm done. For those of you who might be new to the show, which probably aren't, we've got our regulars that watch the show every day. If you are new, do me a favor, click that subscribe button. Also, if you like today's show, give me a little thumbs up. Again, next week, we're going to have Scott McCormick on Monday. We're going to have Justin Krebs talking about annuities on Tuesday. Wednesday, fingers crossed, will be Bill Addis. I want to make sure we have the internet connection. There was something, every time he's on, there's an issue with his his Skype, internet, it drops the calls every now and again. So I'm going to see if I can fix that. And then Thursday, I'll be doing my crypto show, which is, I guess, eagerly anticipated by you guys. I'm hoping that when it's done, you'll love it and actually go and share that show with some people that are skeptics on the cryptocurrency space, especially Bitcoin. So that will do it for me, everybody. Thank you guys so much. Hope you had a fantastic trading week. I will see you on Monday, everyone. Have a great weekend. Take care.